Hello, friends. Welcome to Weekend Investing Daily Bytes. We are shooting episode 350 today, 9th of February. We want to talk about how we want to allow stocks to tell us that they are ready for, our indulgence into them. We usually keep guessing when to buy stocks, when to sell stocks, but a lot of times the stocks themselves tell us when they should be bought and when they should be sold, and we'll look at some examples today for this mental experiment. So Nifty was again within the range of the budget candle. 6 days now we have not broken out of this range. There is a study NR7 where people look out for stocks breaking out after ranging for 7 days, and we are going to have the seventh day in the next session. It does seem like that the Nifty wants to inch up and go up, but there are forces that are causing it to not do that for now. So waiting for that tailwind to happen to break out of this trend line from the top, as well as this minor range that we've gotten ourselves into. In terms of overall sectors, a very sluggish day. Metals losing a bit after running up yesterday, minus 1.6%. Real estate stocks, autos, pharmas, commodities. Pharma stocks, many of them are not coming out with very good results. So that is a bit of a dampener for that sector. IT stocks, despite Nasdaq going down last night, have done well. There have been some order wins. Public sector enterprise, good results from HAL and etc. So Nifty, however, closing flat for the day at 0.1%. Bank Nifty also flat. Not much happening on the day today. You can see in the broader indices, while Nifty was flat, Nifty Next 50 was down 0.5%. Small caps were also slipping a bit at minus 0.25%, and others were totally flat. Within the weekend investing performances, you had a couple of strategies in the green, but most of them between 0 and -1% on the downside. Today's heat map, Adani stocks again getting beaten badly, minus 11% on Adani Enterprise, Adani Ports also down 2.83, and several other stocks still in the circuit. So they have opened briefly, but they have went down to circuit, trying to find some base at some point. Asian Paints up 1.7%, Hindalco up 1.8%, Infosys doing well at 1.6%, Bajaj Twins doing quite well, HDFC Life coming back. So HDFC Life and SBI Life, which were beaten badly after the budget, the life insurance stocks seem to be coming back. IndusInd Bank, as I've been mentioning, is finding some bids at plus 1.6%. ONGC also doing all right. FMCG space remaining a bit calm. There was nothing much besides doing that. So now, from a stocks perspective, the whole theme of momentum investing and structured way of investing is that there be a framework, and the framework in momentum investing that we use is what to buy, when to buy, how much to buy, and when to sell. So what to buy is something that is mostly tricky for a lot of people, because there are 7,000 stocks in the market. So what to buy, how do you decide that? And for deciding that, you need to have a framework of what will be my entry criteria. uh, it could be, if you are a value investor, if you are a fundamental investor, you could be looking at certain ratios, certain earnings parameters, certain earnings momentum, certain market share, some book value based, or some of parts based valuation. So many things that you could look at in terms of how you're going to pick stocks. What to buy has to be clear. In momentum, here we are looking at price action as our leading indicator of how we will be at least getting the stocks in our funnel of selection, and from there we'll have additional attributes, how those stocks will be selected. So while Paytm, for example, this is just an example for the sake of it, has been dropping from 2000 to 500 odd range. So it has never sort of come in that range where it could even come into the funnel of a momentum investor. But now in the last year and a half, it has sort of plateaued out. It is consolidating. It did hit a newer low below 500, but it has come back up very sharply. Maybe it will spend more time consolidating, but unless it starts to go down again, it will start to become a candidate to come into the funnel that will seek our attention. So, like for instance, I tweeted that within the next 10-15%, it will also be coming close to a 52-week high, and stocks that are anywhere close to 52-week high or even several months high will attract momentum seekers. So, what has been a laggard of a stock, after a while, after consolidation, can become your a stock that you could look at. So never sort of think that a stock is always bad or a stock is always good. I mean, there is no emotional connect that we have with any stock. A good stock can have a bad price, a bad stock can have a good price. So it doesn't matter what is the name of the stock. I mean, that this could be named ABC for that matter. But what the idea is that the price momentum should be able to get you into the stock and get you out of the stock. That is essentially what momentum is all about. So another example is BHEL. I mean, BHEL has been dropping for the last I don't know 14 years. It's been making lower lows, lower highs. But now, for the first time, it is looking like it is consolidating. It is breaking out. It actually went to a two-year high very recently. I think it is there in one or two of our portfolios also. So this is how the stock is actually calling out and making itself available for your selection, at least be in that funnel of selection, uh, to be there. I mean, all this while it was not even considerable. It was not even a candidate which would have come into our strategy, but now it is becoming a candidate. So what that does is that it helps you uh, to a large extent. I mean, nothing is 100% right, 100% perfect, but to a large extent, it will keep you away from stocks that are not going up. So, a couple of days back, I posted a list of last 1 year's top gainers and top losers. So, if most of our funnel or the stock selection comes from where the top gainers are, the probability that we will do all right gets assured there. If most of our participants of our portfolio comes from the stocks which are the top losers for the year, then there is likelihood that we will lose money. So at least in the near term, and the average hold for us is 3 to 6 months. So the idea is that identify stocks that have done well, uh, at least which are not doing bad in the last 3, 6, 12 months, and then maybe they're forming a base that you can build on to the next one. IndusInd Bank is another stock where it seems to have now consolidated in the last 2 3 years, and it is now again. I think it was recently at a 52-week high here, and it's sort of jiggling around here. So once some structure is there, and it's in case it does start to move out, I think it can really do well, and that's why we are looking at this stock in some of our portfolios. PNB is another one. I mean, this has gone nowhere in I think like 20 years. It has gone nowhere. But in the very short period of the next 1, 2, 3, 4 years, maybe there is a restructuring story that is happening, or maybe something like this will happen. That maybe 1 or 2 years will be good, and then again it goes into a toss. That can happen. So, but here when it crossed about 40 45 rupees, it did make a 1 and 2 year high, and create a presence for itself in our funnels. So this is just an idea to give you how stocks themselves tell you a story that you should not be looking at us, or you should be looking at us in terms of stock selection, instead of our trying to pick. Maybe this is a good stock, maybe this is a good stock, but if the stock itself tells you that this is I'm presenting myself as a high probability story, that I can do better than most other stocks, then why would you not pick that funnel? Uh, So that was on the topic for the day. Another sort of insight on steel stocks today. So you can see that these are four steel stocks, HR coil manufacturers. Last 15 years of data, excuse me, 15 years of data. This mustard line is JSW Steel. It is up 1500% since 2007. This green line is Jindal Steel. It's up 668%. This light blue line is Tata Steel. It's up 187%. And this purple line is Steel Authority of India, which is down 21% in 15 years. So just see the same industry and all good, decent players, but the trajectory of each player is very, very different. Jindal still did extremely well in the 2007 to 2011 period, and in the last 12 years, it has not even come back to its previous high. So it had a huge collapse of almost 80-90% in this period, and it has now started to restructure itself back. JSW Steel had a turbulent 6 or 7 years from 2008, but since then it had two major runs of almost 5-6 times on each one. So JSW Steel did really well. Tata Steel also had a sort of a lost decade till about 2020, and then from there it has sort of gone 2 or 3 times from there. And Steel Authority initially had done well in 2009, 10, 11, and then it has just been a drab minus 21% from 2007. So same industry, similar products, but very, very different outcomes. So choosing the stock in the particular industry that has the momentum has its value in terms of how it's going to give you that alpha for your portfolio. And that's the takeaway from this insight. So thank you so much for watching this daily bite. Once again, a reminder that all weekend investors should be using the wild program loyalty discount code as and when they come to their annual renewal. So you can renew your existing subscription with an increasing discount each year. So it works like car insurance. So first year, second year, third year, it keeps increasing. And you can also use the same offer that you have for your main subscription to get on to any other weekend investing strategy for 30 days. So these are some special offers that are available only for weekend investors. This is a program that was started by weekend investing, and no other small case manager has been able to do this so far. Thank you so much for your time. Please do keep sharing these videos, keep giving us your feedback, and I'll see you in another one. Bye.